Hi, this is Jeffrey Kerr at Kerr Financial Group. Today is April 14, 2023. So I want to start by looking back at the first quarter for the markets and then spend some time, looking forward in terms of some of the things that are impacting the financial markets and the stock markets specifically. So in the first quarter, overall stocks had a pretty good quarter. The Dow was flat, but the S&P was up 7%. The Russell was up 2.33%, but the Nasdaq led the way, up almost 17%, 16.7%. But I think that an important, looking under the hood, an important point here is that Apple and Microsoft attributed 40% of what the S&P 500's, 7% gain. And, I think that points also, I want to point out that the S&P 500 has 500 companies in it, but it is weighted by size. So the top two companies, Apple and Microsoft, represent 13% of the S&P 500. The top five companies, the top four, Apple, Microsoft, Google, and Amazon. The top five, which then includes Berkshire Hathaway, is 20%. Top 10, 27.5% of that index. So again, the point is that very narrow leadership in a few stocks drove the returns in the first quarter. Now, looking forward, that can, spread out and broaden and be a good thing. But, right now with the narrowness of this move in the leadership, that still indicates that a lot of stocks are not performing as well and are weak. So, looking forward, I think that, the debate is the Fed has a big impact on what's going on. We have first quarter earnings that started this morning with J.P. Morgan. The inflation is a big focus for traders and investors, and then the banking system, I think, is another thing to keep an eye on. So the Fed looks like it changes day to day, but the Fed looks like they're going to raise again the first week of May. That's their next meeting. Then the meeting following that is in June. So the Fed, everyone's looking for the Fed to stop raising. Looks like they're going to raise again in May. I think importantly, the ECB in Europe has raised 50 basis points recently, and their language is they're going to keep raising interest rates. So the Fed's not the only player in this. The inflation rates, we had some numbers this week, CPI, PPI, those came down, from last year. But also when you compare it year over year, we had incredibly record high inflation last year. So the comparisons are coming down. I think the important point to try to determine is, are they going to keep moving down, or does inflation plateau somewhere in this 4.5% to 6% range? And that's not what the Fed wants. They want it lower. Earnings, I think this is going to be a big issue as we go through the next few weeks. Tesla's next week, and that's kind of everybody's looking at that one. But you're going to start seeing the big companies reporting into the end of April. And I think, the numbers, maybe for the first quarter, not so bad. The guidance moving forward, I think is going to be very difficult. And, companies can kind of spin that by saying, well, it'll be a second half, year for us, and kind of the hockey stick where it moves parallel and shoots up at the end. And, that could happen. But I still think when you're looking at the second quarter, third quarter, economy, there's a lot of challenges, and those earnings, corporate earnings, whether they're admitted or not, I think are going to be a strong headwind against those numbers. And then, again, looking at the banking system after the failure of Silicon Valley and Credit Suisse and like that, there is a lot of questions about that. And I think, interestingly, the credit default swaps, which are a measurement of how safe the banks are, the financial stability of the banks, they've been rising. So people are buying insurance against the banks, failure through the CDS market, and I think that's an important point too. So leave it at that. Give me a call, text, or email with any questions, comments, or suggestions. Thank you so much. Goodbye.